All right, time to look ahead to see what we can expect for the U.S. and Canadian markets for 2026. Our next guest thinks Canada will see some developments in its economy, especially with new collaborations with Asian and Middle Eastern countries, thanks to the Carney government. Here to talk about this is predictions for the market, Michael Dehal, Senior Portfolio Manager at Dehal Investment Partners, Raymond James. Michael, thanks for joining us. Happy New Year to you.
Happy New Year as well, Roger. Good morning.
All right, we want to talk about both big pictures, U.S. economy, Canadian, but let's touch on Canadian first. Your thoughts? You think there could be some good signs, good times ahead?
Yeah, absolutely. We do think that the Carney government, some of the policies that they're putting into place could provide some tailwinds to our Canadian economy and to our Canadian equity market. Areas that we do like are industrials, as well as other types of financials sectors within the Canadian economy. But we do think that the Carney government will have some great policies in place, more of the physical side. The heavy lifting has been done by the Bank of Canada, so we do not expect any changes to interest rates in 2026 in terms of rate cuts, but we do think that now the fiscal policy should do its job.
And start to kick in. What else would you like to see from the Carney government?
Continued spending, more spending on infrastructure, on construction, to really beef up our economy here in Canada, as well as trade partnerships outside of the U.S. I know Carney has been going to other parts of the world, Middle East, Europe, Asia, to strengthen those relationships. So what I'd like to see in 2026 and beyond are more partnerships with other countries outside of the U.S. and really strengthen those relationships and helping our exports go across borders.
Now, I think a lot of people were expecting these magical deals to be signed all in the first 3 months after he made these announcements that we're looking outside the U.S. What kind of possible headwinds might we see for the Canadian economy?
The big headwind is obviously the U.S.-Canadian trade relationship, right? We do have the USMCA agreement coming due, I believe it's August of 2026. So we could see some volatility ahead of those talks, and if anything, if there is any agreements prior to that date, but that could be a headwind. Another headwind to our Canadian economy could be a job market. We are seeing a bit fragility in our job market, although the last 3 months, the unemployment rate has come down slightly better than expected, primarily due to part-time jobs. But the job market is something that we are looking at, whether unemployment rate goes higher and the impact on immigration. Obviously, the government has reduced the number of immigrants to Canada, and that could have an impact to our economy as well.
And it does seem like a lot of companies have adjusted or adapted to the tariffs, and they didn't have as much of an impact. But of course, if CUSMA goes by the wayside, as Trump has hinted that could happen, that would have a huge impact, though, wouldn't it?
Absolutely. And that's the big the question mark is the uncertainty around the trade talks, right? So if that does go a bit sour, that could have a headwind to our economy, and so that's something that we are definitely looking out for. But we do think that our government, Carney, and the party will have our best interest for the Canadian consumers to kind of alleviate any negative impacts to those discussions or to that agreement that could come forth.
Okay, let's talk a little bit about the U.S. economy. What are you seeing? Unemployment was down there as well. It seems to have defied expectations, hasn't it?
Absolutely. We had such a resilient U.S. economy in 2025. After the Liberation Day of April, many people thought that the U.S. economy was going to go and, derail. And however, the consumer, the U.S. consumer, once again proved resilient. And GDP growth in the U.S., I believe, will probably come for the full year higher than expected. And we do think that continues. We think that the U.S. resiliency continues in 2026. This year, we'll probably see more tailwinds on the AI front. We're looking at companies that are benefiting from AI, from productivity, from efficiencies on adopting AI. So we do think that, in 26, the U.S. economy continues to march higher, obviously at a slower pace for the last 2 years. But we do think that we will probably get another robust year in the U.S. Economy, and we'll probably get another good year in the U.S. markets. We'll probably get more volatility this year than we had last year, but with some of the, the tax cuts that the Trump administration is implementing, deregulation, as well as the Fed continues to ease throughout the year in 2026, that can all provide very fruitful for the U.S. stock market.
And you mentioned about AI and companies are starting to incorporate it now. Are we starting to see actual figures on savings and or potential savings with it?
Yeah, we're still in early days. A lot of CFOs, CEOs on their earnings reports, their earning calls, are looking at AI, how they're adopting it, how they're increasing their margins, improving their gross margins using AI. So we are still early days of AI adoption for the beneficiaries, but we do think over the next several quarters, it will get better as more and more companies adopt AI in terms of improving efficiencies. And again, that would go right to the bottom line, improving gross margins, which in turn helps stock prices.
Okay, I just want to bring it back to Canada for a sec. Mortgages for 2026. It's always something everybody's talking about. The housing industry, the housing market for Canadians is a big deal. What are you seeing there?
So that is a potential headwind. We do have a number of mortgages that are renewing in 2026. Remember, these are the so-called COVID mortgages that people got 5 years ago, right? So that would be something that we are looking at during the last the big Canadian bank earnings season that we had last month. Banks are increasing their PCLs, putting some money aside for potential loan loss provisions if consumers are unable to renew their mortgages or have difficulties with their mortgages with a higher rate. But that's something that we are definitely looking at. It is a topic of concern in 2026, the housing market.
Okay, we have to wrap it up there, Michael, but thank you as always for joining us. All the best for 2026. That's Michael Dehal, Senior Portfolio Manager at Dehal Investment Partners at Raymond James.